Welcome to an in-depth exploration of the future of finance. Today we're diving into a transformative shift in the stock market. It's called DeFi or Decentralized Finance, and it's revolutionizing everything. In 2025, DeFi achieved a significant regulatory victory. This win is fundamentally changing how we access and trade stocks. Gone are the days of relying solely on traditional brokerages. DeFi is ushering in a new era of financial independence. This is DeFi's triumph. How decentralized finance is reshaping stock markets in the post-tariff era? Let's begin with the fundamentals. What exactly is decentralized finance, or DeFi? DeFi is a collection of financial applications built on blockchain technology. It enables people to lend, borrow, trade, and invest without intermediaries like banks or brokers. Imagine a peer-to-peer financial network that operates globally. It's driven by smart contracts, which are self-executing agreements coded on the blockchain. These contracts automatically enforce rules, ensuring transactions are fast and transparent. DeFi has seen explosive growth since its inception around 2020. Projections for 2025 estimate it will climb to $32 billion. By 2030, experts predict it could soar to $231 billion. That represents a compound annual growth rate of over 53%. This remarkable growth is not happening by chance. DeFi provides benefits that traditional finance often struggles to match. It's accessible to anyone with an internet connection. You don't need a bank account or a brokerage account to participate. This accessibility is a game changer, particularly in the post-tariff era. So, what exactly is the post-tariff era? In 2025, global trade is navigating a challenging and complex landscape. Tariffs, which are taxes imposed on imported goods, have become a central issue. The United States, under new leadership, has introduced tariffs on various countries. For instance, a 20% tariff advantage was granted to India over China. In response, China imposed 125% tariffs on certain U.S. products. These trade barriers are significantly reshaping global markets. They're driving up costs and creating uncertainty for investors worldwide. This is where DeFi emerges as a powerful solution. DeFi platforms operate on a global, decentralized network. They aren't bound by any single country's regulations or trade policies. This makes them highly resilient to tariff-related disruptions. Let's dive into the 2025 regulatory win that catalyzed this transformation. In early 2025, a landmark decision reshaped the DeFi landscape. The European Union's Markets in Crypto Assets regulation, known as MiCA, was fully implemented. MiCA provided clear, comprehensive guidelines for DeFi platforms. It allowed these platforms to operate legally across all EU member states. This was a monumental step toward widespread DeFi adoption. Across the Atlantic, the United States saw a parallel development. South Carolina dismissed a significant lawsuit against Coinbase. The lawsuit had accused Coinbase of offering unregistered securities. This dismissal marked a shift away from regulatory hostility. It gave DeFi platforms the confidence to expand their operations. These regulatory victories created a ripple effect across the financial world. They encouraged institutional investors to enter the DeFi space. Major banks and hedge funds began integrating DeFi protocols. This influx brought unprecedented credibility and liquidity to the market. Now let's examine how DeFi is reshaping the stock market. Traditionally, trading stocks involves a brokerage account. You open an account, deposit funds, and often pay substantial fees. The process can be cumbersome, slow, and costly. DeFi completely eliminates these barriers. With DeFi, you can trade tokenized stocks directly on the blockchain. Tokenized stocks are digital representations of real-world stocks. They're securely stored on the blockchain and traded on DeFi platforms. For example, you could trade tokenized shares of Apple or Tesla. No broker, no middleman, just you and the blockchain. This is all made possible by the power of smart contracts. Smart contracts execute trades instantly and securely. They ensure that all terms are met before finalizing the transaction. This dramatically reduces both time and costs. In traditional markets, trade settlements can take days. With DeFi, settlements are nearly instantaneous. This efficiency is a massive advantage for investors. It's particularly valuable in volatile markets affected by tariffs. Let's talk about accessibility in greater detail. DeFi platforms are available 24 hours a day, 7 days a week. Unlike traditional stock markets, which operate within set hours, anyone with a cryptocurrency wallet can participate. This democratizes access to financial markets like never before. It's especially impactful for the unbanked and underbanked populations. Globally, over 1.4 billion people lack access to traditional financial services. DeFi provides them with a pathway to invest and build wealth. This inclusivity is transforming lives and communities worldwide. Now, let's explore how DeFi enhances portfolio diversification. DeFi assets often have low correlation with traditional stocks. This means they don't always move in lockstep with the stock market. During market downturns, DeFi assets can serve as a hedge. For instance, tokenized stocks or yield-generating cryptocurrencies. These assets can help stabilize your investment portfolio. This is particularly important in the post-tariff era. Trade wars and tariffs and significant market volatility. DeFi offers a way to mitigate these risks effectively. Let's take a closer look at some leading DeFi platforms. Uniswap is one of the most prominent players in the DeFi space. It's a decentralized exchange, or DEX, built on the Ethereum blockchain. Uniswap allows users to trade tokens directly from their wallets. It's renowned for its high liquidity and low transaction fees. Another key platform is OV. AV specializes in decentralized lending and borrowing. It offers innovative features like flash loans, which are uncollateralized loans. These loans are repaid within seconds, enabling unique financial strategies. OV's redefining how we think about credit in the digital age. Then there's MakerDAO, another influential DeFi protocol. MakerDAO is the creator of the DI stablecoin. DI is pegged to the US dollar, providing stability in a volatile market. It's widely used for transactions across DeFi platforms. These platforms represent just the beginning of DeFi's potential. They're laying the foundation for a new financial ecosystem. However, DeFi is not without its challenges. Let's discuss some of the hurdles DeFi faces. One major issue is ongoing regulatory uncertainty. While 2025 brought significant progress, not all countries are aligned. Some governments are concerned about financial crimes. DeFi's pseudonymous nature can complicate enforcement of anti-money laundering laws. Anti-money laundering, or AML, regulations aim to prevent illicit financial flows. Regulators are striving to balance innovation with compliance. Another challenge is the issue of security. Smart contracts, while powerful, are vulnerable to hacks. A single bug in the code can lead to substantial financial losses. High-profile hacks have highlighted these vulnerabilities. Developers are actively working to enhance security measures. Scalability is another hurdle for DeFi platforms. Popular blockchains like Ethereum can become congested. This leads to high transaction fees and slower processing times. Newer blockchains are addressing these scalability issues. However, achieving mass adoption remains a work in progress. Despite these challenges, DeFi's potential is undeniable. Let's explore how DeFi is integrating with traditional finance. Major banks are beginning to embrace DeFi technologies. They're experimenting with blockchain for various applications. For example, JP Morgan's Onyx platform leverages blockchain. Onyx facilitates faster and cheaper cross-border transactions. This is a significant improvement over traditional methods. DBS and SBI digital assets are also active in this space. They've conducted pilots under Singapore's Project Guardian initiative. These pilots tested DeFi for bond and foreign exchange transactions. The results demonstrated DeFi's practical applications. This signals that traditional finance is adapting to DeFi. DeFi and traditional finance are increasingly converging. This convergence is creating a hybrid financial system. It combines DeFi's efficiency with traditional finance's stability. This hybrid model is poised to redefine global finance. Now let's delve into the concept of tokenization. Tokenization is a cornerstone of DeFi's impact on markets. It involves creating digital assets on the blockchain. These assets represent real-world items like stocks or bonds. They can also represent real estate, commodities, or art. Tokenization makes these assets more accessible to investors. You can own a fraction of a stock, property, or even a rare painting. This fractional ownership lowers the barrier to entry. In 2025, real-world asset tokenization is experiencing rapid growth. A Binance research report valued the market at $12 billion. By 2030, it could reach an astonishing $16 trillion. That projection comes from the Boston Consulting Group. This growth is fundamentally reshaping stock markets. Tokenized stocks can be traded around the clock. They're not restricted by traditional exchange hours. This increases liquidity and flexibility for investors. Let's discuss the role of artificial intelligence in DeFi. AI is significantly enhancing DeFi platforms. It optimizes liquidity management for decentralized exchanges. AI predicts market demands and allocates resources efficiently. This reduces risks like impermanent loss for liquidity providers. AI also strengthens security across DeFi protocols. This proactive approach helps prevent hacks and fraud. AI-driven platforms also offer personalized investment advice. This makes DeFi more approachable for new users. User-friendliness is critical for achieving mainstream adoption. Now, let's address the risks associated with DeFi. DeFi is a relatively young industry. It's still navigating its share of growing pains. Market volatility is a significant concern. Cryptocurrency prices can fluctuate dramatically. For example, Bitcoin dropped to $83,000 in 2025. This was just days after reaching a peak of $88,000. Such volatility directly impacts DeFi assets. Investors must exercise caution and conduct thorough research. Another risk is the potential for smart contract failures. A single coding error can lead to catastrophic losses. The FTX collapse in 2022, while not DeFi-specific, shook the crypto industry. It underscored the importance of robust security practices. DeFi platforms must prioritize airtight safeguards. Finally, there's the risk of regulatory crackdowns. Some countries may impose stringent regulations. This could potentially limit DeFi's growth in certain regions. Investors should stay informed about global regulatory developments. So, how can you get started with DeFi? The first step is setting up a cryptocurrency wallet. Popular options include MetaMask and Trust Wallet. These wallets securely store your digital assets. Next, you'll need to acquire cryptocurrency. Ethereum is the most commonly used for DeFi applications. You can purchase crypto on exchanges like Coinbase or Binance. Once you have a wallet and crypto, select a DeFi platform. Research platforms like Uniswap, AVs, or MakerDAO carefully. Evaluate their security features and read user reviews. Connect your wallet to the platform of your choice. Then you can begin trading or investing in DeFi assets. Start with small investments to learn the system. DeFi can be complex for newcomers, so take your time. Let's look at the future of DeFi and its potential. In 2025 and beyond, DeFi is expected to continue its rapid growth. Institutional adoption is a key driver of this expansion. More banks will offer DeFi-based products and services. This will attract a wave of retail investors. Cross-chain interoperability is another emerging trend. Different blockchains will collaborate more seamlessly. This will improve user experience and platform efficiency. Decentralized derivatives. Markets are also gaining traction. These markets enable trading of options and futures on the blockchain. They represent a new frontier for DeFi innovation. DeFi insurance is another area poised for growth. It protects users against smart contract failures and hacks. This builds greater trust within the DeFi ecosystem. DeFi's influence extends far beyond stock markets. It's transforming multiple industries. Take the insurance industry, for example. DeFi streamlines complex processes like claims handling. It reduces paperwork and audit costs significantly. This makes insurance more efficient and cost-effective. DeFi is also making waves in the gaming industry. GameFi integrates gaming with decentralized finance. Players can earn real money through in-game assets. This creates new income opportunities for gamers. It's reshaping the digital economy in profound ways. Let's recap the key points of DeFi's triumph. DeFi is revolutionizing how stock markets operate. It's bypassing traditional brokerages entirely. It's making investing more accessible to everyone. The 2025 regulatory wins were a pivotal moment. They granted DeFi legitimacy and mainstream appeal. They also attracted significant institutional capital. DeFi is now a critical component of the financial landscape. It's here to stay and will continue to evolve. However, investors must remain vigilant. It's reshaping the financial landscape in the post-tariff era. It's creating a more inclusive and equitable financial system. Thank you for joining me on this exploration of DeFi. If you found this video informative, please like and subscribe. Share your thoughts and questions in the comments below. Stay tuned for more insights into the future of finance. Until next time, invest wisely and stay informed.